that we are down across the board. And if we throw up what the interest rate complex looks like, that could very well be a culprit today. No doubt about that, as we've got rates that are moving higher. Some of the Fed speak lately has been undeniably hawkish. So you have to believe that December is 50-50. But as they were just saying at the end of the program prior to this one, maybe we even dipped a little bit below that in terms of expectations for what the market is going to, get from the Fed in December. That seems to be the story today, no?
Yeah, I think it's actually part of a bigger story. And I was talking to a portfolio manager about this a couple days ago, and he was saying, welcome to the ABC market, or anything but chips. The AI CapEx story is not quite unraveling, but there are more questions surrounding it than ever before. And in the absence of any actual fundamental news, because we're already through earnings season, other than NVIDIA, people are just saying, you know what, I've made a lot of money in this trade. These stocks have gone up a lot this year, at least most of them have. And there are other things that I want to do in my portfolio that aren't directly tied to this trade. So the ABC market is in effect on a day like today, where you see a weird thing like at an index level, the market down, but actually pretty decent internals. And that's because other stocks that are not as important to the averages are actually gaining money while money comes out of that trade. Energy is a great example, and we're going to talk about a new energy name on my best stocks in the market list later in the show. But energy is now leading all sectors on a short-term basis. 100% of the sector components are above their 20-day moving average. Financials number 2, 80%. Healthcare number 3, 74%. That's where people are making money at the moment. Tech is second worst. Only 32% of tech stocks are above a 20-day moving average. Not the end of the world, but a definitive change from what we would have talked about even 3 weeks ago.
Kerry, I feel like you're going to have a pretty good battle. I was trying to pick my word. Battle in the room, in the FOMC, of what's going to happen in December. So if we take it at what the market is placing its bet on now and say it's less than 50-50, and if we don't get a cut in December, what happens to the market and the idea of an everything rally into year end, which some have been banking on and we may have had the earliest glimpses of in the last couple of sessions?
We've been hearing for weeks now that there's a split at the Fed. And every single day, I feel the Fed leaks information, or the members are talking about it. They talk about it.
It's not being leaked. They're putting out themselves.
They want people to know that there's less and less of a chance, and it's daily, that there'll be a rate cut. I think the market has absorbed that pretty well and has begun to look at other things in order to grasp onto what is positive for the market and for shareholders. So earnings were good, and earnings have to stay good. Whether tech matters or not, of course, it's huge. Energy is a tiny, tiny percent of the S&P. What's the weight in the S&P?
It's like 3%. So, right. Whatever. It's probably a little bit bigger than that, but
it's like a stock. It's just like half of Microsoft or less. So I feel that the movement of the rest of the market is less important than what happens with NVIDIA's earnings. Whether we start to see moving into the end of December, we don't have to have these stocks all rally. Now, they've had huge runs so far this year. I think it's perfectly natural for them to take a pause. I think it's great that the rest of the market is participating.
I know, but what about my question? I don't feel like you're getting at my question. If there's no rate cut in December, what happens to the market?
I don't think the market is going to care that much. I think the market can go down 5%, and then it would be sort of comfortable with 5%?
Where we are.
Yeah, well, that's
you mean
nothing.
If we don't get a rate cut,
rate
cut in December, we might go down 5%?
Yeah, on that day we might have a 5%, a 4%, 5% decline. We might have a couple more percent.
Flip the question. How many people would say that they're buying stocks right now for a rate cut? I don't know anybody.
I don't think anybody is.
No. Well, let's put it into perspective, because that's a nuanced question. If you say that in and of itself, are you buying stocks because of a rate cut? People are going to say no, because there's all these other stories, like the ones that Kerry said. Earnings are good, AI, everything that everybody already knows. However, it's one of the things that got put into the stew pot for the bullish case.
We got 2 rate cuts.
Yeah, well, the market was 100% for December. Now it's less than 50. It's just part of the story that's been out there. You have good earnings, you have big capex, you have the deregulatory environment, you have M&A, blah, 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 and you have expectations of the Fed being your friend. Well, if the Fed sticks its hand out and then you go to shake and it says, pulls it away, how much does it matter?
But why did they pull it away? Because the labor market hasn't. Because the labor market hasn't deteriorated further.
Because inflation is a little bit stickier than probably they would like it to be. Yeah. What do you think?
Well, they haven't had any economic data with the government shutdown. I wouldn't say the Fed reluctantly cut 2 times, but Powell was getting a lot of heat from President Trump, and this gave an opportunity without economic data to really go into a pause. And the Fed doesn't want you to just to know that there's a rate cut coming. I mean, they need to balance the opinion, and that's what they've done. I think that you're starting to see a little bit of pause in the tech because of that. That may have been a catalyst. There's other catalysts out there with the OpenAI conversation, obviously other things out there that have been headwinds, the CapEx conversation, and that right here, I don't think we really need. The market is pricing in a rate cut now to a coin flip. I don't think it's a necessary thing. However, I feel pretty confident you're going to get a rate cut from them.
I mean, maybe it's necessary, if you want to use that word, for certain parts of the market, Jenny. Maybe it's necessary for the small cap trade to work, because I'll tell you what, it's not working today.
No,
down 1 3/4% because it's so sensitive to the rate cut question. Maybe other cyclical areas of the market need a rate cut. Ones that would participate in an everything rally if we were to get one into the end of the year. Do people think you need a rate cut for stocks to do okay? I don't think so. But if I pulled the rug out from under you on that idea, it may have a little bit of an upset because it could push rates higher, even further from where they are now, and that would change the calculus, even if it's incrementally so.
So I don't think the actual rate cut matters at all. Whether they cut 25 or 50 or whatever, that's not what matters. What matters is why. Why would we not get a rate cut in December? And if the reason that we don't get one is because the economy is doing perfectly well and we don't need one and things are maybe a little stronger, then that's great. And I think that might actually be why we're seeing this rotation today. And from my seat, we are in a serious rotation right now. So when I look at my screen, which you all know are dividend stocks with super low valuations, a lot of energy, no tech, a lot of energy, a lot of real estate, a lot of consumer staples, a lot of pharma, my screen's bright green today, which is shocking. And so what I'm thinking is this is a much bigger story. Why is tech down? And my partner, Greg, he always says no one rings the bell at the top, right? So there was no bell rung. But at some point in the past couple weeks, suddenly people started caring about profitability. And suddenly people started caring about valuations. And then you look at my portfolio and I'm like, okay, what's the one thing I've got going for me? They're all profitable. They all have low valuations. So I see this rotation happening. And I do think it's interesting that small cap is down so much because I don't know that that's telling. I really don't think the rate cut matters in and of itself. It's the why behind the rate cut.
Sure, but it matters to the Russell, as you say.